The market's rallying pretty hard this morning. After our video we did yesterday on signs of a market bottom, we're certainly hanging in there and holding that 200-day moving average. We're going to buy a healthcare name today that has a 10% dividend because as the economy gets wobbly, you always want to think defensive. So THW down 5%. It's a healthcare name. It is a healthcare closed-end fund that's off the highs. It was around 16. Now it's at 14. And it has a 10% monthly yield. So these are the kind of things we like, things that move with the market or very close to the market. If it's not the index related to the market, we like sectors that are highly correlated to the market. So we've had a nice dip here at 14. RSI's at 40. MACD could cross back the other direction. These are the kinds of signs that you like to see in a bottom. So we're going to go ahead and add 1,000 before it gets away from us. It's at 0.42 today. So we'll add 800 because our debt is we want our numbers at an even, be at exactly 214. THW, there it is. We added to that. Now our estimated income should be about $100 more. If it was 97, let's say before it was 97.6. Now it's 97.7. So every day you just creep up your income slowly without adding too much risk. This day's gain number is nice, 7,000, but remember, we don't care if we're up or down. We only care about this number, 1.22. See the NASDAQ up 0.96, Dow at 0.58, S&P at 0.82, so we're beating the market. And that's all you can ask for. And our performance of value proves that. Our performance of value shows that we're up 19.4 versus the NASDAQ's up 12 and the S&P's up 6. So you keep your performance by adding slowly to names every day. One more thing I want to show you is the S&P 500. Yesterday we did this video on signs of a market bottom. So I just want to see how we're looking today and follow up on that video. So SPY is up 1%. I told you wanted to have a strong reversal when it's having a few down days. And 1% is not really strong, but 1% is a pretty good move. And if we can have a stealth rally like I described yesterday, this could look like what is a stealth rally is, which is you hit the 200-day moving average yesterday, the orange line, then we tagged the 100 right below it, but then we hammered off it, and now we're opening on the 200-day moving average above it, at 400 a share. So this is very constructive. You're seeing the RSI bounce here. Now we could go lower, I said yesterday, and we could break below the blue line, the 100-day moving average. See, blue line, 200-day moving average, orange line. The blue line, 100-day moving average. So we could break below that, but odds are we would hug it and hold it because 380 looks like strong support here. We had a strong base here. Each candle's a day, and looks like we consolidated here for about a week or two. So I don't see us going back down to this level, especially when interest rates are seen as not moving much higher in 2023. We priced that in 2022. Anyway, we wanted to buy the dip. We've been adding to things on the dip. USA funds, we've been making videos on USA funds. One of our largest holdings right now, 13,000 we have in USA. We'd like to get that up some more. It's up 1.5% today. And I'm afraid that this is going to get away from us in a hurry. So I'm going to add actually $500 to it as well because we've had our market weakness. I'm being disciplined. I've only added a small amount to healthcare today, so I can afford to add a little bit more to USA. The maintenance is low. We've done past videos on maintenance. USA and THW both have low maintenances because they're considered conservative investments. So we just increased our income even more now by doing that. 214,500. We increased our margin as well, but we increased our income. And if USA and the market falls further, I will use any dip to add more to this fund because this fund beat the S&P over the last 10 years. See our video on our wall about USA. But anyway, THW, I'm proud of adding to this one. It had a perfect pullback, 10% dividend. It's conservative. It balances out some of the riskier names we've been buying lately in IIPR, which we just did a video on yesterday, and Devon. Outer sectors of the market that provide growth and excitement to the portfolio, but also a lot of risk. So we like to balance out that risk with funds like USA. So we added to that today. We also like to balance out our risk with healthcare, so THW. So THW and USA, they balance out the risk of IIPR, Devon, and the San Juan royalty. So on any further market weakness, I will add, but we'll only add in small nibbles, as that's how you manage your risk, but slowly increase your income throughout the year. Thanks.